talk about a bunch of earnings that we have today. Then the first corporate on our show is Signature Global. They reported a good set of third quarter numbers with pre-sales perking up 47% year on year. We have with us Rajat Kathuria, who joins in to discuss the performance itself. Rajat, thank you so much for joining in. Of course, we did have your sales numbers quarterly update that came by already. Pre-sales up 47% in the third quarter. Where do you see that number for the full year as we end FY24 and your target for FY25?
Yeah, so thanks for inviting us to the show. So, see, what we're witnessing in the real estate space, especially in the Gurgaon NCR market, is a sustained sort of, uptake on volumes. So I'll put an analogy here. So let's say it's not a situation that you stack up a store and you're seeing more customers coming into it. It's a situation wherein, you're stacking up a store, it's kind of getting emptied, and you're again kind of, stacking it up. So if you look at the last 3 years and not just this last quarter, we doubled our sales between FY21 and FY23. For the current year itself, we had given a 30% rise in the pre-sales target, which is at 4,500 odd crores, and we feel fairly comfortable, achieving it for the current year. We will be giving similar, guidance for the future period once, we've achieved this target for the current year, because operationally things, it looks like a very sustained sort of, uptake in demand, and there's no cyclicality, which is kind of visible at this stage.
Okay. All right. So your 4,500 crores would equal to what on a year-on-year basis in terms of growth if you compare it to FY23?
It's over 30%. Last year we did about 3,400 odd crores of sales, and this would be more than 30% rise during the current year.
So you're anticipating a 30% rise going into FY25 as well?
Yes, we do believe a 30% rise is achievable in the coming year.
Okay.
Right. You spoke about the split with regards to your mid-income, affordable and retail business itself. With the forthcoming projects that you have, what is this split likely to be going forward?
So see, in the current year, we've primarily done mid-income housing. We are still in process of completing affordable projects. So if you look at the current portfolio, we have about 17 million square foot, of which 30% is affordable and 70% is mid-income housing. This entire 17 million is launched, and only about 8 to 10% of that stock is unsold as of today. This 17 million equates to about 12,000 odd crores of, GMV. If we talk about the forthcoming inventory, which is almost like 27 million square foot, or in value terms, it will be in excess of 35,000 odd crores. This is primarily driven out of projects in the mid-income segment itself, and it does not have any significant or any material component of the affordable housing.
Okay. There's an expectation that, there could be a push from the government also when it comes to mid-income housing, something that the FM had spoken about or the finance minister had spoken about during the interim budget. From that perspective, what do you think, or how do you think you'll probably cash in on that in terms of an opportunity? And how would it probably benefit your business, if any?
See, government, finance ministers talked about it, and I think they should share more details about, what they plan to do in weeks to come. And, we would also keep a close watch on, what sort of incentives are, provided by the government. But see, the fundamental remains that this is a supply constrained, situation. I personally feel it's happening across the key cities in the country, but at least in the Delhi NCR region, the kind of supply of housing stock which should have been added over the last decade hasn't happened. And, there is a need of a lot of supply to be created over the years to come. So, whatever incentives, government provides, I think it will be a very welcome step for the entire industry.
On your balance sheet, let's talk about that, because last time you joined us, you did say that you are anticipating about 3,000 crores worth operating cash flows in FY24, of which the surplus would be around 35% net of the money that you would spend to, buy the land, and your target
Correct.
net debt for this year is about 1,000 crores. How does this pan out in the next fiscal year as we see it?
So we are absolutely on track. I absolutely recall that particular statement. So our guidance for the operating cash flows for the year is 2,900 odd crores. We've already achieved 72% of that target as of December 2023. So we've collected almost close to 2,100 odd crores. We stick to that guidance. We are fairly comfortable achieving between 2,900 to 3,000 odd crores of cash flows for the full year. Our operating surplus for the 9 months stood at 36%. So almost 756 crores of operating surplus got created during the first 9 months. So we are on track of achieving that 1,000 crore surplus for the year. Our net debt as of December end was at 800 plus crores net debt number. So the net debt will remain lower than the operating surplus for the year. So that's our guidance, and we look at it in a very clinical manner.
Okay. Your realizations have moved up quite significantly in the past couple of years, from FY21 all the way from 3,977 to around 9,800 as of 9 months of FY24. What can you guide for going into FY25, maybe even FY26? Where do you probably see these realizations peak?
So see, realizations have gone up because of two primary factors. In the earlier years, we used to focus a lot on affordable housing, whereas we are doing more of mid-income housing over the last year, this year. So that's one of the key factors why realizations have gone up. Second, there have been certain industry tailwinds. I think prices in general in the market have gone up, and that's also getting factored into the realizations of the company. Fundamentally, see, we would want to see volumes grow up and realizations or value grow up only at a particular pace. It's better for the industry in case we are able to achieve higher volumes, meet demand of more and more families in terms of providing product which is at a reasonable or an affordable price. It could be in the mid-income segment, but something which is, I would say, at a competitive price. Our target will be that we increase pricing only at sort of inflation levels, 5 to 8% and not more. But if industry dynamics are such that prices go up, then we'll probably reconsider on it.
All right. Thanks a lot, Rajat, for joining in and giving us your update and outlook for the next few months and the entire year. We will keep track of your sales, and we will have a conversation with you by the end of the next quarter as well. Wish you a good one.
Very much.